Evercore out with a note today saying it's a, quote, stock picker's paradise in the space and adding NXP Semiconductor to its top picks list. Let's bring in the analyst behind that call, CJ Muse. CJ, even NXP aside, so interesting to me that you like NVIDIA and Intel. I mean, somebody who likes Intel, I haven't heard that name on a likes list in a long time. Why?
Yeah, John, thanks for having me first off. But for Intel, I think that when they cut the dividend, the stock didn't go lower. That was a clear signal of a bottom. And since then, data points coming from Taiwan suggest that PCs are recovering, and they're under shipping PC sell-through by 40%. So if we were to speak to what we were hearing earlier in your discussion with the other panelists, what's going on is that semiconductors, have been cutting for the last 11 months, basically, clearing away inventory. And so now we're going to have a PC recovery. And on top of that, Intel had a data center analyst day a couple weeks ago. And you know what? First time in 7 years, they didn't downtick. So I think slowly but surely, you're going to see rising optimism here. Numbers are going up through the year. And really, this is an under-owned name that investors, I think, over time are going to have to chase. So, tactically, Intel is along from here.
Okay. So stock picker's paradise. What specific names, you just mentioned Intel, but what other names would you buy here and what would you steer clear of rather than, say, a broad-based purchase of the stocks or something else?
Yeah, sure. That's a great question. So, our focus is that the market is realizing that March, April is the fundamental bottom for semiconductors. From here, the call is what is going to accelerate in the second half of 23 and more importantly into 2024. On that front, we like data center, so we're sticking with NVIDIA. The next bottleneck in AI is the network. That is now causing problems for these large language models, ChatGPT, et cetera. And so Marvell, Broadcom, those are winners there. What would we avoid? We would avoid semi-cap equipment right now. We love that group, but, the group has had a good run. Numbers are not really going to move higher over the next, 3 to 9 months. So that's a group that's ripe to take a pause here.
Now, how much of this depends on the chip makers dealing with the inventory overhang as quickly as possible? And how can we be sure that they're going to do that given all of the projections of a slowing economy in the second half? Does it require a stronger second half in order for that to pan out?
Another great question. No, I'd say that, first and foremost, we've been cutting for 11 months in semiconductors. So if you look at June a year ago through today, revenues for semiconductors on average are down 15%. EPS is down 27% for calendar 23. So the numbers have been cut. We're under shipping end demand. Our estimate is that Intel is under shipping PC sell-through by 35 to 40%. So we are naturally going to have a catch-up trade. And then to your question, in terms of GDP implications to demand, looking out 3, 6, 9, 12 months, yeah, at some point that's going to have a role on what the steady state demand picture looks like. But in terms of a catch-up, it's set in stone. We're bottoming it here, and we're going to see numbers move higher.
CJ Muse of Evercore, thanks for joining us.
Thank you for having me.